Hello and welcome back to Money Never Sleeps. My name is Bob Cruces from M&A Wealth. If you'd like more information about what you hear during the show, give us a call at 866-973-3627 or visit us online at mnawealth.com. And while at my website, click on the page to check out past shows and subscribe on Apple Podcasts or Spotify. During the show today, we're going to discuss some of the things that should be on your radar as you make your move toward retirement. Let's get things rolling with a U.S. News and World Report article. If you want to retire in 2026, here's what you need to prep now. Your first step should be optimizing your portfolio. Here's something every retiree needs to know. Retirement isn't just a lifestyle shift, it's a financial one too. You're no longer feeding your accounts. Now you're living off them. That means the way you invest needs to evolve. The goal is a smart balance of income, growth, and risk control. The article explains that it could mean a custom mix of investments that are tailored to your goals and your comfort level. Even high net worth people need to rethink how their portfolios are taxed and structured. The bottom line is that retirement isn't about guessing, it's about planning. Work with your financial services professional to make sure you're pulling money from the right places at the right time. That way you may see income that lasts, taxes that shrink, and confidence that grows. Remember, smart moves now can help make the most of everything you've built. Let's talk about one of the biggest retirement questions out there. How much can you withdraw each year without running out of money? You've probably heard of the 4% rule that's been a go-to guideline since the 1990s. The idea is simple. You take out 4% of your retirement savings in year one, adjust for inflation, and you've got a high chance your money lasts 30 years. But here's the thing, that 4% rule isn't law. It's more like a speed limit sign. Just because it says 45 doesn't mean you always drive 45. Sometimes slower is safer, sometimes faster makes sense. In the same way, your withdrawal strategy should adjust to your life and the market, not the other way around. That's where something called a guardrail strategy comes in. It sets flexible boundaries so when markets are strong, you may be able to take a little more. And when things are rough, you pull back a bit so that you stay on track. Talk to your financial services professional about how to build a plan that gives you the freedom to enjoy your retirement without second-guessing every dollar. Let's talk about where these Medicare surcharges actually come from, because they didn't just fall out of the sky. Bear in mind that taxes don't retire just because you do. In fact, for many people, taxes become one of the biggest expenses in retirement. That's why it's so important to have a strategy, not just hope. If your income crosses certain thresholds, you could end up paying more for Medicare through something called IRMAA, which is a surcharge that quietly eats into your retirement budget. And don't forget about taxes on dividends, capital gains, and investment income. It adds up fast. That's where proactive planning may pay off. Working with your financial services professional and your tax professional can help you stay ahead of surprises. From tax loss harvesting to planning your withdrawals in the right order, a thorough strategy can help lower your tax bill and stretch your income further. Let's next consider how much you should be saving for retirement right now. A U.S. News and World Report article, How Much Should You Save for Retirement in 2025, has some excellent details. One of the most common questions people ask is, how much do I need to save for retirement? And the honest answer? It depends. There's no one-size-fits-all formula. It comes down to where you are right now, how far you are from retirement, and how much risk you're willing or able to take on along the way. If you're closer to retirement or prefer a more conservative investing style, you may need to save more to hit your goals. But here's the good news. Where you save matters just as much as how much you save. Using tax-advantaged accounts like 401ks or IRAs can help your money grow without Uncle Sam taking a bite every year. And if you're looking for tax-free income in retirement, Roth accounts could be your friend because you pay taxes now and keep more later. But don't forget that Roths have possible drawbacks that could mean they aren't a good fit for everyone. So be sure to discuss them with your financial services professional. Let's talk about your first move. If you're serious about retirement, max out your accounts. If you've got access to a 401k or IRA, use it and push it to the limit. In 2025, that means 401k, $23,500 if you're under 50, $31,000 if you're 50 plus, $34,750 if you're 60 to 63. IRAs, $7,000 under 50, $8,000 if you're 50 plus. Yes, it's a big number, but not saving will ultimately be a bigger challenge. Don't bank on Social Security alone. Take control now, so your future doesn't belong to chance. Let's be real, not everyone can max out their retirement accounts, and that's okay. And here's a solid target to aim for. Save 15% to 20% of your income. If you can start closer to 20%, that's even better. It's always easier to dial it back later than scramble to catch up. This is especially doable for younger workers who may not have as many expenses yet, and that early momentum sets the stage for long-term growth. Let's say 15% just isn't in the cards right now, that's okay. The truth is, saving something is always better than saving nothing. Start where you can, build the habit. Consistency matters more than perfection. As life throws you extra income, a bonus, a gift, maybe even an inheritance, don't let that money sit idle. Put it to work. That's how you start closing the gap. And if you've got a 401k with a company match, at the very least, grab that match. That's free money. That's momentum. If you have any questions about your retirement magic number, your retirement strategy, or any other parts of your financial strategy, visit my website at mnawealth.com or call my office at 866-973-3627 to discuss how my team might be able to answer your questions and address your concerns. It's our goal to help you prepare for the retirement you've worked so hard for.
Disclosure. All matters discussed during the show are for informational purposes only. Opinions expressed are solely those of M&A Wealth and staff. All topics covered are believed to be from reliable sources. However, M&A Wealth makes no representations as to its accuracy or completeness. This commercial shall in no way be construed as a solicitation to sell securities or advisory services to residents where permitted. Topics should be discussed with your individual advisor prior to implementation. Advisory services offered through M&A Wealth, a registered investment advisor in the state of Texas. Insurance products and services are offered through PNC Life Insurance Agency, an affiliated company. M&A Wealth and PNC Life Insurance Agency are not affiliated with or endorsed by the Social Security Administration or any government agency.